Let's get it. Today we're talking about Bitcoin. Are we bullish or are we bearish? We will be discussing both sides of the argument so that we can come up with a plan for the immediate short term and in the long run as well. So let's go. What is up, everybody, and welcome to the Crypto Cabin. My name is Tom, and in today's video we're going to be breaking down Bitcoin's chart analysis, taking a look at both the bullish scenario and the bearish scenario. If you're new to the channel, please scroll on down, leave this video a thumbs up, hit that subscribe button, and click that little notification bell and select all so you get notified for when I post these new videos. So without any further ado, let's jump right in here. So you've seen a lot going around Twitter, TikTok, YouTube, a lot about what could potentially be happening here with Bitcoin. And any good, content creator, in my opinion, is going to be giving you both sides to the argument. We could definitely be going lower. We could definitely, be close to a bottom and go up. We could be close to a bottom and trend sideways, which, as you'll get into this rest of this video, you will see that that is more of my opinion right now. Based on Bitcoin's history, you will see that it does appear that we are getting very close, at least. This does not mean by any means that we are going to be rebounding and shooting right back up to all-time highs anytime soon, but it does mean that we are in a very, very good dollar cost averaging zone. If you go back and check out this video that I posted 5 days ago, you will understand what I'm talking about there and some more reasons why. I will link that video right up here. But that is basically showing a lot of different metrics saying that even if we aren't at the exact bottom right now, we are still in a very good time frame to be dollar cost averaging into Bitcoin. And I still believe that that is the play right now. I am also dollar cost averaging into some of my favorite altcoins, like I've mentioned before, Link, Dot, and Atom, but I also understand that those have way more risk associated with them at this point in time. If Bitcoin continues to go down and Bitcoin continues to go sideways even, we will see the Bitcoin dominance chart continue to go up because people are losing faith in altcoins. And so just understand that you are taking on way more risk, in my opinion, right now, buying altcoins versus buying Bitcoin or trying to work on stacking some cash on the side. So I want to go over the bullish scenario and the bearish scenario and kind of explain my plan and what I am currently doing at this point in time. So let's start with the more bullish case scenario. So when we take a look at the last couple bull runs here, when we zoom way back here in 2014, 2015, what we see is that when we broke the 100-week SMA, we were very well, shortly after we found the bottom. So this line right here, this kind of orangish blue line, as soon as we broke below it for good, we had 1, 2, 3, 4, 5 weeks before we hit a bottom, or very close to a bottom. You can see we did range sideways for many weeks back here. I believe this was close to a year, or at least like 9 months or so, so 42 weeks. We ranged sideways pretty good. So that is, again, 1, 2, 3, 4 or 5 weeks until we hit the bottom, according to that one back in end of 2014, beginning of 2015. When we come over here to 2017, or after the 2017 bull run, we come and we take a look again at the end of 2018 here. Once we officially broke down through the 100-week SMA there, it took 1, 2, 3, 4 weeks again before we hit the bottom. Once again, we traded sideways for a while before going on our way back up. This one, when we kind of broke through the 100-week SMA, was kind of that black swan event, right, of March 2020, where we broke down and did end up eventually touching the 200-week moving average as well, which we touched in the last few points as well. So now we come all the way to where we are today. We broke down through that 100-week SMA, and it's been 1, 2, 3 weeks since we broke down. So either next week or the week after, I would not be surprised if we did wick all the way down here to touch the kind of 200-week simple moving average there, and then have found very close to a bottom. That would be very close. That doesn't mean we can't trend sideways for a while. We could get a big wick down there, come back up, and trend sideways for a while. That is the most likely scenario in my opinion at this point in time. But we are very, very close. That's the feeling anyway. And Plan B says the same thing. I mean, whether you agree with Plan B or not, you can see here that he says 29K right now feels very similar to 2015 and 2018, 2019. So we're in that blue range, whereas you can see, again, according to this chart, we did go sideways for a while, both there and here as well. And that we are just kind of starting that. So we, again, in my opinion, entering some very, very awesome dollar cost averaging zones here. One more reason to potentially think that we have, come at least close to the bottom. We're not there yet, I don't think. I think we still do have a little more downside to go based on those charts anyway. We did get close, and then we kind of did trend sideways and potentially down for a little bit longer. Is the momentum waves here on our market cipher down in TradingView. So when you take a look at these vertical lines again, the green line here, is the peak. The red line here was the bottom. Before leading up to the bottom, so after the peak leading up to the bottom, what we can see here is we had one momentum wave down here, and we had a second lower momentum wave, and a third momentum wave, and that marked pretty well within a week of the bottom. Now we go to 2017, 2018, so I guess 2018 into 2019 here. We had, again, one momentum wave, two momentum waves a little lower, and then a third momentum wave down lower still. Once again, that green dot aligns pretty well with the bottom of that cycle. Now we come over to where we are today. We had, after the peak, once again, if you aren't sure, if you think, why am I calling, April the peak for this scenario, even though we went higher in November, go and watch that video that I linked before, chatted about before, and I kind of explained why there's an argument at least to be made for why April could have been the peak versus November. So if we do count this as the peak here in April, we have the same thing forming here. One momentum wave, a lower momentum wave, and we are now forming that third momentum wave even lower here. So we've broken below that 100-week SMA. We have 3 weeks already below it. We could get a fourth or a fifth week below it still. And then potentially we form that third green dot down here with a consecutive lower momentum wave. And then we could be, once again, very, very near to the bottom. And whether we are at the exact bottom or not, like I mentioned in that video before, we do seem to be in great dollar cost average territory. So in this yellow box, for me, this is anything kind of below 30K all the way down to the very top of that 200-week moving average, which is just over 22. This is my dollar cost average zone where I am scaling in, not crazy amount, but I'm still scaling in. And then we got below here, if we get down into this green box, this is a very wide range, obviously, but this is where my buy orders would get a lot bigger at this point in time. One other thing I forgot to mention in regards to these third consecutively lower momentum waves, I mentioned it in that last video that I had as well, but the third and lowest momentum wave starts just after we start getting into red on the money flow here on the weekly. So that is getting very red, really low on the momentum wave, green dot. We start getting low on the momentum wave, we start going red on the money flow, green dot. Once again over here, we've gotten a third momentum wave lower, starting to get red on the money flow. So now I'm kind of waiting for that third dot to show us that we are potentially at the bottom, or at least very close, and all signs show that we are kind of pointing in that direction. One more thing we can look at is the RSI at these given points in time. So RSI from January 2015, December 2018, and now here in, could be potentially June of 2022. We haven't quite got to that 30 level of RSI here on the weekly, or just under that. That seems to have been marking the bottom in the past two cycles, and we are now getting close to that. We are still not quite there. I think we are at about 33. Yeah, our RSI is at 33 for as of right now. So we would want to see that come down probably a little more. So again, that makes me think that we do have maybe another week or two for sure of potential downside. We have printed, the 9th or potentially printing the 9th consecutive red-green candle. 1, 2, 3, 4, 5, 6, 7, 8, 9. So we are potentially forming that 9th consecutive red candle on the weekly chart, and it's breaking records. Everyone is thinking we've got to see a green candle at some point soon here. In my opinion, that's like saying it's hit red 9 times in a row on the roulette table. It has to be black. No, it doesn't. It does not have to be black. It can still be red, obviously. So that is kind of what I'm looking at. That's why I've got this red line here, because this would be that 5th week after we broke down the 100 simple moving average, which is kind of where it is looking like we could potentially be reaching the bottom here in the next week or two. And if you ever want more just straight bullishness, check out TA Analyst on Twitter. I don't know if I've seen a bearish tweet from him yet, even throughout all this bearishness. So if you want a little hopium, check him out. I would obviously be looking at a lot of other people as well, because you are getting, in my opinion, from this guy, for the most part, from what I've seen anyway, is one side of this argument. But he does post some pretty compelling charts quite often with a lot of different looking metrics. But in his opinion, we've kind of already capitulated. These were the monthly capitulation candles, in his opinion, and he's got a lot of different metrics showing that we, have crossed over certain thresholds for different things. I think this one's a volume oscillator. This one was Bollinger Band percentage difference or something like that. So he's got a bunch of these charts that basically just are, he tweets a lot. He's just showing that, we could potentially be close because of how this all lines up with previous cycles. Similar to how, I've been showing you some of the differences on the way that I look at it. Here is a bunch of different things that he is also looking at. However, if we are looking at the technical analysis for the bullish side of things, we also need to take a look at it for the bearish side of things, while also understanding that at this point in time, with everything that's going on in the world, fundamental analysis is probably going to be more important than the technical analysis side of things. So if the Fed does continue to keep hiking rates higher and higher, there's going to be a continued level of uncertainty as to when they're going to stop doing that, and we could see money continue to flow out of the cryptocurrency space in general. So that whole fundamental piece is way more important. We ought to be looking at what the Fed does, what's going on in the news, the rest of the world, with all the other uncertainty going on. When people are uncertain and fearful, they're going to technically, or usually they're going to go away from these risk-on assets. And we are definitely in a space of, very much in space of fear when you look at the Bitcoin Fear and Greed Index. We're at a 14, I believe. It's been down as low as 10. But when we are that low, once again, another sign saying that dollar cost averaging should be part of your game plan right now, at least for Bitcoin, in my opinion, because we should be selling when people are greedy and we should be buying when people are fearful. Like I said, this is some form of technical analysis, so we do need to also look at the bearish scenario as well. I mentioned this move last time. So this is the head and shoulders pattern that was broken on the weekly time frame. We got a shoulder there, we got the head way up here, and then we have another shoulder here. So it has broken that neckline, and this would be the measured move of that all the way down here to roughly 16K. Like I mentioned before, once we cross down below the 100-week SMA, we usually come down to touch the 200-week SMA, which we have not done yet. So that could also be another reason to be slightly bearish here still, is that we have not done that, and typically we do touch that in the bottom of bear markets. And if you want to get really scared, really worried, you can come here and check out the VPVR. So this is kind of telling us how much Bitcoin has been transacted and at what price. And you can see here that we are kind of just like hanging on to the last bit of this bigger volume section here, which is in between, the high 20s to low 40s here. There was quite a bit of volume transacted in this phase. If we do break down below this level here, that's why I've got this line right about at 28.8. We are hovering very close to that. We're just over 29K right now. In my opinion, I think if we get a weekly close here below 28.8, we can be in for a lot further downside. The next big volume candle here is all the way down at 18, 19K. And after that, we don't get a lot of volume until 10 to 12K. So, and that is, indicative of the charts looking back here. We have basically a big run up from 2017 to this level here, right around 18, 19K. We could have a little bit of, a stalling out point right there. If we are unable to hold that, there is not a lot of support until we get all the way down here to 10. That is, in my worst case scenario, would be all the way down here. That I don't think that is going to happen, because like I said, there's a lot of things happening that are showing us that we could potentially be nearing a bottom, or at least trending sideways for a little while. And this would be absolute worst case scenario. If we do get down there, like I said, that is still in my green box, which is a very big range. But this range, anything under 20K, would be where I would start dollar cost averaging in a lot more. So like I said, that's kind of my strategy right now. We are in dollar cost average territory, especially for Bitcoin. Altcoins, like I said, are probably a lot more on the riskier side of things. However, I have told you guys before and have mentioned that Dot, Link, and Atom are some of the ones that I do like for the long term here, and those are still ones that I am dollar cost averaging into, as long as they are in my ranges. So I've listed these out just like I did for Bitcoin. Yellow is kind of lower amount dollar cost average, and green is going a lot heavier into it. So Dot and Link right now are in those ranges for me. Atom is kind of been hovering around there, not quite. It has wicked down, and so I did pick up a little bit more back then. But another thing that I would be looking at too is this momentum wave on the weekly. If we do get a green dot here on the weekly, that would be a sign for me to go in a lot more too. Because when we get down here on the momentum waves, you can see how good of a time that would have been to buy on the weekly time frame when we get that green dot. Same thing for Link. Back here, we got a green dot momentum wave. Back here, green dot momentum wave. This one wasn't bad. This one, still did give you a little bit of a run to the upside, but by that point, we were obviously in a bear market territory as well. And then Polkadot, we can take a look. Pretty much the same thing. Obviously, other than getting in back here when it launched, which I was able to do, was get in back here for a little bit. You can see green dot, boom, major run to the upside. Green dot got a good upside push there. So if we do get another green dot here soon, I would maybe go in a lot more as well. Those are things that I am personally looking at right now. Obviously, you need to come up with your own plan and strategy, but those are kind of my 3 favorite altcoins right now that I'm going into a little bit, like I said, each week. And then another one to take a look at, and I think that one that most people should just worry about is Bitcoin. Dollar cost averaging into Bitcoin if you're newer to this space, because right now that is the simplest, easiest thing you could do, and the risk to reward right now for Bitcoin anyway is getting to be very, very good in my opinion. So that is it for today, everybody. Thank you so much for watching, and if you got some value out of this video, please scroll on down, leave this video a thumbs up, hit that subscribe button, and click that notification bell and select all so you get notified when I post these new videos. I appreciate each and every single one of you. I'll see you next time on the next episode from the Crypto Cabin. Let's get it.